Namaskar and welcome to our internal audit series. This is one of my favorite subjects, and I have been into this area for a while. Special audits, forensic audits, IT audits, system audits, and variety of other assignments where the management wants confidence on the operations and is worried about certain aspects or overall view of the company, and sometimes it is mandatory, sometimes it is recommendatory that once you are growing at a particular size and scale and progressing with your business, get a right internal audit to sort your tension out of the way and allow you to focus on doing your core job. Uh, Someone who says, don't worry, everything is all right, also makes a hell lot of a difference, right? So we have Hiten Bhimjiyani here on our show on internal audit series. Hiten has been in this area of CFOing and internal audit and consultancy for more than 8 years now, and is of course a chartered accountant and has tremendous focus on adding value to businesses who work with us on various internal audit projects. Today we will ask him few questions, and by that way try to educate all the owners, CFOs, company directors, board about what is the importance of internal audit. So we will take up with the basic questions in the round one of this series. So Hiten, first question to you is very basic. What is internal audit and what is the importance of internal audit in a business?
Hello everyone. Thank you Mitesh ji for the nice introduction. Coming to basic question like what is internal audit? I would say internal audit is like a regular health checkup. Internal auditor focuses on process improvement, control reviews, identifying risk and preparing plan to mitigate those risks. So in a way from business point of view, it's like identifying weaknesses. Uh, Otherwise, it becomes a major problem for the business. So internal auditor looks at the larger picture and reviews controls, process, risk, etc. So internal audit is really important for businesses who want to improve.
In short, Hiten, you mean to say that internal audit is like a health checkup, gives overall view of the organizations, gives ideas on controls, processes, systems, people of a company to a management, and keeps the management into perspective and control whenever they operate. So it is
Absolutely.
very important that organizations who are growing leaps and bounds, be it in the terms of numbers, that is turnover, having a lot of capex involved into their action. There is a lot of new people getting hired in the company, and overall there is a growth that is happening in the organization. It is very important that the companies have right internal auditors who are giving them a third eye view on what is happening with the organization. With this, we will move to the next question, Hiten, for you. How does internal audit differs from the statutory audit and the traditional tax audit that the organizations generally go through?
Okay. So I'll answer this in two parts. One is the legal requirement. So statutory audit, tax audit, etc. are prescribed under various act, and the act also gives a particular way of reporting, questions to be answered. So for example, every company has to get statutory audit done from chartered accountant, and the auditor focuses on true and fair view of the financial statement, etc. Tax auditor will focus more on tax aspects like whether tax provisions are taken care and what is the tax liability likewise. But internal auditor appointment is for companies, it is governed as per section 138. So company, there are different criteria. One of the criteria is that if company has turnover about 200 crore, then internal audit is mandatory. And for entities which are like partnership firms, LLP, internal audit is not mandatory as per the law, but management conducts or appoints internal auditor for constant assurance. So that was one differentiating point. Second major differentiator is the scope of the audit. As I told you that in other type of audit, law requires a particular questionnaire to be filled, just to put it in a simple manner. But here in internal audit, scope is not defined by the law, even for companies. So scope is decided between management and auditor. So there is very high level of flexibility. In fact, we can say that anything under the sky can be covered in internal audit, subject to technical expertise of the firm. So internal audit has very wide scope, and it's perhaps a big differentiator.
Correct. So, Hiten, this is very, very true. And it is also true that the organizations sometimes are not required to do any kind of internal audit by any statute, or the scope of internal audit, so to say, is not directly governed by the statute, other than saying that the internal financial controls should be in place. The management can think of aspects that look like out of control, or in not in so much of balance and control, or have overgrown the control or insights that the managements have on the organizations. Such areas or specific scopes can be also explored as an internal audit exercise. There is a possibility that the management may say that we have costs which we never imagined would be happening before, and please give us your view on the cost. There is a chance that
Right.
a management can say that the revenue has overgrown and we can't see all the revenue happening within our control. So please give your perspective whether all the due revenue is booked right in time and the company is getting what it should be getting in terms of revenue. The company may say, look at debtors, creditors, or receivables and payables, look at inventory and so on. And even the company can say there is a huge capex happening, so please help us with the fixed assets. So
True.
depends on the company's rolling requirements and growth progression. The company may choose internal audit scopes in a varied manner and use a right internal auditor who can guide them through right scope of work and redefine and reconfigure the scope of work on the basis of the time moment and need moment. Like, for example, a company is implementing an ERP and is not feeling in control with regards to the transactions happening through an ERP. That's also an area of internal audit interest to the company. And such areas are not looked after by a statutorily defined audit, that is statutory audit under a Companies Act. Neither are these into the scope of a tax auditor. So these actually slip in out of the table, and sometimes the management may miss overview on those aspects. So internal audit plays a critical role in this aspect. You are right, Hiten.
Absolutely.
So let's move to the third question. How does internal audit actually uh, evolve, or what is the scope uh, that the auditor needs to be given by a management, and how the auditor should keep on configuring and reconfiguring its scope?
Right. So, as you also pointed out, that scope is not constant here, and there is, a way to look at it, like different processes can be taken in different period of the internal audit. So processes, simple processes like procure to pay. So from vendor selection to payment of the accounts payable creditor, or we can say order to cash. So, till from the date when order is received, by the sales team or marketing team, to the actual date of amount being credited into bank account. So this entire process can be taken in one scope. So this covers day-to-day transactions like purchase or sales. In another scope, one can say hire to retire, because employee management is also very important aspect of any business. And in fact, I personally believe that to some extent, uh, good processes and good people drive the business. So process like employee hiring, onboarding, their induction to their payroll, their statutory compliances, and even their exit procedures, their exit interviews, exit formalities, etc. So everything related to HR can be covered in one scope. And similarly, there are different processes like record to report, how financial statements are systematically generated based on the day-to-day accounting entries passed by different branches, different plants. So there may be many more, and we can talk about it in a separate session itself, because scope itself play a very major role. But while defining and concluding scope, we should focus on the management concern also, as you said, and any past audit experience. So if there has been any leakages in cash, so more emphasis should be given on cash management, cash collection procedure, cash depositing procedure. This is typically a case for retail industry, where huge cash collection happens every day, and then there are, say, issues in reconciling or short recording of the cash transaction, etc. So coming to the point, while deciding scope, we may take up different process and rotate it based on frequency. Also, there could be aspects which is not related to accounts or finance directly, but very important, like quality control aspect or IT security and database management, because it's very important that all the systems and network of an organization is well protected. Or there may be a point where a company is providing after sales service, and that plays a crucial role for the client to differentiate with competitors, because some industries are very competitive, for example electronic industry. So in that case, how after sales service experience helps the business to grow. So here, although the internal auditor may not focus on after sales service entire year, but definitely reviewing the processes, reviewing the mechanism will help business to understand any critical aspect which is lagging or not as per the industry standard. I hope I with few example
Yeah,
explain the taking up, picking and choosing of scope as and when the business grows, and based on previous experience of the auditor.
perfect, perfect. So, can you also suggest how does actually an audit like this, that is an internal audit, add direct value to an organization? Generally, all the audits are seen as cost centers, and the activity is seen painful by a promoter or a management, and they feel pinch paying an internal auditor. So, how do you look at this kind of a scenario?
Right. So, Mitesh, this is a very practical problem, and any entrepreneur investing amount would look at the ROI. So unless internal auditor, actually gives actionable items, not just a report, but an insight which can help the business, the management would always feel it is a cost center. But nowadays, I would say majority internal audits deliver ROI, better than the investment amount. So it's like when someone is driving a car on highway, he would constantly look in the rear mirror to ensure that yes, he is going on a speed and everything is fine. So internal auditor will constantly assure or highlight concerns to the management that okay, business is growing, numbers are growing, but whether your profitability is also growing in the same manner, or your assets are being controlled correctly. So each and every balance sheet or P&L item can have a significant impact if not controlled from accounts business point of view, or even statutory compliance. So we hear in the news that even big companies, NBFCs, or any big corporate also faces some compliance issue, and that can even interrupt their day-to-day functioning or business aspect. So now I would say the cost of non-compliance is much higher. This is of course highlighted by all the different auditors, but internal auditor also helps to ensure that he adds value in the business from different aspects, not just from compliance, but from business process reviews and improvement, etc. So many observations can be defined in terms of ROI. I'll give you say one or two examples. If a company has multiple plants and their people are buying say packing material from different local area, and someone sitting at HO can actually compare and analyze that, why don't you have a central purchase function where you you decide the vendor and every plant just buys from the same vendor. Or if there is already a central purchase agreement, but whether it is implemented or it is not adhered to by giving different excuses that the lead time was high, or maybe the requirement was urgent, etc. So now in this scenario, the entrepreneur can actually see direct cost saving or benefit of looking at a process from holistic point of view. So to summarize, I would say internal audit adds more value than the cost it involves, and it really helps entrepreneur to, I would say, explore different possibilities with the help of auditor to improve upon.
A lot of possibilities of adding a lot of value. Myself and Hiten have been working on multiple assignments of multiple size and scale of different business models and industries across the globe. And we have been finding that an internal auditor brings an experience of very different business models, industries, scale, size, and can feed into his internal audit report all that experience and ideas, and also help the entrepreneur think through as to how to change, configure, reconfigure, restructure his control mechanisms and his way of working, his hierarchy, his business model, so as to grow at a faster pace than what he could have ever imagined. So that's the idea of an internal audit. And that's the value add exactly that we bring on table through these exercises. Now going to the next question, Hiten, for you. Can internal auditor help in identification and prevention of fraud? Is that his primary goal, or is that his tertiary goal, or how does it actually happen when you look at internal audits?
Yes, internal audit is a powerful tool to prevent or detect fraud. Although the primary objective is not to just find frauds, but the process itself enables the a direction where if there is any fraud, which may get highlighted automatically. So, for example, if it's a logistic company and consumption of say petrol diesel is a major cost for them, so in if it is observed that there is a high volume of consumption in certain region or certain area, so I'm talking about a company which operates in multiple states and work on a different routes. So if it is observed that this particular route always consumes more than average, then it comes under a suspicious transaction, and auditor can highlight, and further investigation can be conducted by auditor or management or maybe jointly to uncover any fraudulent activity happened at branch level or plant level or even in HO. So primarily it focuses on identifying unusual transactions or the deviations from process. So this itself is the beginning of identifying frauds. But I would say primary objective is not to find fraud, but lot of time during the audit, management may get a hint that yes, based on the observation of internal auditor, something has gone wrong. That indication is definitely given by internal auditor.
So this is very important that one may expect an internal auditor to find or come across a fraud situation or a situation where there is a huge issue going on, but that is not practically possible to be done by a statutory or a tax auditor. So here is one of the critical differentiator why one should have a good internal audit team involved into his business and consider this internal auditor as his assurance partner or risk management partner to fast track the progress. Like brakes are not used to speed up a car, but if you don't have right kind of brakes, can you really speed up your car with confidence? That is the question that one should ask, whether an internal auditor or a brake is required to speed up a car or not. So with this, we will
Yes.
go ahead with another question for Hiten. How frequently should a business conduct an internal audit? Actually, the scopes are very undefined in internal audit. So some people only do it annually. Some people follow an half yearly model. Some go for quarterly, some go for monthly, and some even prefer to do day-to-day internal audits. So we'll listen to Hiten as to what is his view as to how frequently the internal audit should happen in an organization.
Right. So, internal audit can be conducted on monthly, quarterly, half yearly, or even annually. But the value addition or impact will change according to the frequency. So it is, as per good industry practice, internal audit should be conducted at least quarterly, not with lesser frequency. So, for example, if it is an annual internal audit, then and if it is starting after the year end or towards the end of the year, then it's more like a postmortem. So transactions happened before 8-10 months are reviewed, and process gap is identified. But even after doing that, a lot of time is passed. So the value or value unlocking will happen very late. So it is good to have quarterly internal audit system, in my opinion. Even monthly system is better, because here internal auditor may not be able to review too much on a monthly basis, but 1-2 processes each month will cover more processes on an annual basis. So in my opinion, monthly or quarterly internal audit are better. And when a management feel that a particular area requires a lot of review or attention, then they go for a concurrent audit, which is a bit separate activity. And in that, every day same type of transactions can be reviewed to ensure that it is a high value transaction or a critical transaction. So concurrent audit covers huge volume, and internal audit is on sample basis. But internal audit should be conducted at least quarterly to get the benefit out of it.
Yes, great. So Hiten, actually the management, I think, should sit with a good internal auditor, spend good amount of time, tell exact issues and problems that they are worried about that are taking away their night's sleep, and allow the internal auditor to think through an audit plan, a frequency, a priority setting, a roadmap, and an outcome-oriented internal audit engagement. That will actually help
Agreed.
the management to actually fine-tune and use the internal auditor's abilities to have nice sleep at the night and at the same time fast-paced growth. So this combination actually needs a lot of thinking through. I feel that most internal auditors traditionally go back and do what they are required to be doing, and most promoters think that internal auditors know their job, they will do it well. Both of them are actually not playing right role. So the both of them needs to keep on coming on table once in a while, engaging with each other, reviewing the plan again and again, and rejigging the plan basis the requirement, the need, the dynamics, the change in the business model, and that will actually plow maximum ROI for the promoters or the management in this process. Let's go to the last question, Hiten. What should an entrepreneur or a management look for when it is selecting a good internal auditor or a good internal audit firm?
Okay, it's a bit tricky question, because all internal audit firms will generally have a lot of capabilities. So from management point of view, they should look for a firm who has more on ground experience or industry experience, or they have I would say worked on variety of industry. like here the experience also plays one important aspect, and the internal auditor who has seen variety of plants or worked on different industry like manufacturing, service industry, BFSI, would give holistic point of view in risk assessment, process reviews, etc. So other than the capabilities, whether the firm is commensurate to the business size and scale, more practical exposure of the firm should be evaluated to finalize internal auditor for the organization.
Superb. So a lot of experience, a lot of involvement, and lot of bandwidth is required when you do any kind of internal audit. It is a very, very engaging activity vis-a-vis a statutory or a tax audit. It needs depth, it needs business understanding, it needs resonance with the promoters. When you actually get into the shoes of promoters and think through what are their challenges and work with them to practically plan, structure, restructure things, that is when your value addition comes through. And this is exactly what we at
Yes.
APMH have been proposing and thinking through and trying to add value in a lot of our assignments. With this, I would like to wind up today's uh, series of discussion with Hiten Bhimjiyani. The idea is to keep giving thoughts and structured concepts to owners, directors, CFOs, CEOs in a very, very lucid and a simple and non-technical manner so that they can understand, absorb, and value add to their organization straight away from these discussions. With this, we would like to conclude the session. We keep on adding value to your concepts, ideas, thoughts on taxation, accounting, audits, internal audits, business advisory, funding, etc., on various talk shows and series that we do with experts on various topics. Please subscribe, like our YouTube channel, and also specifically share this video to your friends and relatives and concerned fellow business owners who can really gain from these thoughts and who are really growth oriented and want to change the gears with the help of this small tool called as internal audit. Thank you very much. Dhanyawad, and be in
Thank you.
touch. Thank you, Hiten.